Hey, what's up, my friend? So welcome back to this month's price action analysis. This is a monthly video that I do, right, where I break down, right, the trading opportunities that I'm seeing here in the market, right? And I even share with you, my winners, my losers, my thought process, why I'm about to enter a trade, how I'm looking to trade it, and stuff like that. So if you like to, see, right, how I find trading opportunities in the market, then this type of, videos is for you, right? So let's kick things off, right, by sharing with you a loser, right? A loser that I had, right, while trading last month. So the pair is actually New Zealand yen, and let me just walk you through, right, what was my thought process, where I entered the trade, and why it was a loser, and what you can learn from it. So backtrack a little bit, right, back in May. Okay, you can see that this market, New Zealand yen, is in a downtrend. You can see, a series of, lower highs and lower lows. In fact, there is this trend line. If you just look back in time, right, you can actually see this trend line that the price has been respecting. So clearly, my bias is towards the downside. And as you know, I don't just sell the market because the market is in a downtrend. I like to trade from an area of value. So what I noticed, right, is that this market, yes, number one, it's in a downtrend. Number two, we have what I call a build-up that's being formed. Let's call it BU, right? And this is the type build-up that's being formed. So what's interesting about build-up, right, is that the market, right, is in a low volatility environment. This means that, the market is kind of like storing potential energy to make a big move, right? Whether higher or lower, it's pretty much anyone's guess. But for me, right, I was looking to sell this market, right, since overall trend is towards the downside. So as much as possible, I want to look for selling opportunities, right, within the build-up. So on this time frame, it can be difficult to see, right, the opportunity that presented itself. So when I went down to the lower time frame, like the 8-hour time frame, so let me share with you the opportunity that I saw. So what I saw is that, again, right, this over here is pretty much the build up that you saw on the weekly time frame. And I noticed that on the 8-hour time frame, there is a false break setup over here. So let me just zoom in to let you see clearer. You can see that over here, the market actually came into this area of resistance, came into it, then rejected at the highs and closed near the lows of this time frame. So this to me is a form of price rejection, and you have seen earlier that on a higher time frame, the overall trend is in a downside. It's in a downtrend, and also we are in a build up. So my thought process that, hey, this is a opportunity for me to place a short trade, right? Having my stop loss right above this high, somewhere about here. And I know, right, that this market right now is in a build up. So in a build up, right, if the price breaks out of the build up, the risk to reward on the trade can be pretty darn favorable. You can make anywhere 1 to 3 1 to 3 risk reward ratio, 1 to 5 or more, because if volatility expands in your favor, right, you can see that the profit potential on the trade is pretty darn attractive. So that really made me want to take this trade. So I went short, okay, and as you can see, right, the price pretty much went a little bit in my favor over here, before it actually exploded up higher and I got stopped out for a loss. So, couple of lessons here. Number one, this is a trade that I would love to take over and over again, because again, when you place your trades in a build up, and if you nail the direction right, no one can predict which direction it will break out, whether is it higher or lower. But if you get in the trade, right, you got the right direction, right, you can see that the breakout that occurs, right, could be explosive, right, and the potential profit is really there. So yeah, in this case, right, I got the direction wrong, even though I'm trading with the trend. Hey, it happens, right? But still, this is a trade that I would love to take it over and over again. And the second lesson I want to share with you here is that if you notice, right, that the market is in a build up and you enter a trade, and if the market moves against you, right, in this type of market condition, you don't want to be averaging into your losses. You don't want to be widening your stop loss, because as you can see, right, when the price broke out of this build up, right, when it broke out of it, it became fast and furious. Is where the potential energy that was stored earlier is now being released. And when it's released, right, you can be sure, right, that your losses can snowball really quickly if you do not cut your loss readily, right? So again, right, when you trade, when the price is forming a build up, if you're wrong, get out of the trade quickly. Don't pray, don't hope, and don't wish that the market comes back in my favor. No, right, that is disaster. And another thing to share with you is that prior to the price breaking out, right, you can see that there is also another valid setup that you could have taken, right, at this area of support over here. Again, this is another false break. The price take out this lows, and then reverse and close higher above support. So clearly, I didn't take this trade, right? If not, I'll be sharing with you a winner. So I didn't take this trade, right? But this would have been an opportunity for someone to buy when the price is forming a build up on a higher time frame, and then to reap potential profits, right, that are favorable to you. Okay, so yep, this is the first thing to share with you. Another thing to share is a potential opportunity that I'm seeing. So there's a trade just to share with you my thought process. So another one to share with you is the pound Aussie. So you just look at the pound Aussie right now, you can see that this market, right, it's in a downtrend. How do I know that, right? Because I see a series of lower highs and lower lows. I mean, you just look at the chart, right? You know that this market, right, is pretty much, towards the downside. Also, it has also broke below this area of support recently. Okay, so now the question is, where do you enter the trade? So number one, we understand the market structure. Price is in a downtrend. Next thing, where is the area of value? Where might be a good trade location, right, to look for selling opportunities? So you're looking at this daily time frame, and from the looks of things, right, things here is a little bit cramped to find trading opportunities. So this is where, if you understand multiple time frame analysis, like going down to the 4-hour time frame, things will become much clearer over here. So if you look at a 4-hour time frame, okay, now you can find an area of value. Market is still in the downtrend, and if you ask me, this seems to be in a healthy trend. If you overlay the 50 MA, right, notice the price has been bouncing off, right, a few times already. One, I'll take this as twice, thrice over here. So now, the key thing now is to be patient. Don't chase the market, because if you were to chase the market, let's say you sell over here, and if the market does a pullback towards the 50 MA, you can see that you have to swallow that drawdown. And chances are, right, I do not know where you're going to put your stop loss, but I'm going to guess if you sell at this point, your stop loss is probably somewhere here or here, and you get stopped out on the pullback. So be patient, okay? Don't rush, don't jump the gun, don't chase the market. So where you want to be patient, right, is, I would say, an area of value that, let's zoom in a little bit, could be possibly somewhere here, right, around the 185 level, where previous support, right, could become resistance. And on top of it, coincides, right, with this 50 MA as an area of value. So this is where you can look for potential selling opportunities. Again, nothing too fancy over here. You can just look for a simple price rejection, like, a shooting star, a bearish engulfing pattern, right, to time your entry towards the downside. So something like the price retrace, breaks out, breakout, and smash down lower, close lower, crap. So when people buy breakout and they go, crap, right, that's where you want to be selling, right, to take advantage of traders who long and chase the breakout. So when you get this type of price rejection, when the price hits higher and then gets smashed down lower, reverse, and close near the lows of the candle, this is to me, it's a price rejection, and you want to be looking for selling opportunities. And again, we're not selling just because there's a bearish candle. There are multiple factors in play over here. Number one, overall trend is towards the downside. Number two, we have the area of value, which has a confluence of the 50 MA as well as the previous support that turned resistance. And number three, we have a valid price rejection, right? Could be a candlestick pattern, a bearish pattern, right, to help us time our entry towards the short side. Okay, so this is for the pound Aussie. Moving on, what else can I share with you? Okay, dollar Mexican. So this is a trade that I took then, and yeah, let me share with you my thought process again. So this one over here, right? If you zoom out, right, you might see that to a trader, to a new trader, they might see, Rayner, this market is in an uptrend, and I agree, right? Long term wise, yes, this is in an uptrend, okay, and this might be just a really deep pullback. But here's the thing, right? As a trader, as a price action trader, you also want to focus on the now. So here's my thought process, right, when I'm looking at the now, trading the now. So yes, I know that this overall market, right, could be in a long term uptrend, but as of right now, okay, this market seems to have broken out of this consolidation pattern, right? Some people call this a pennant, whatever, the name isn't important. Then it broke below this this area of support. Okay, when it broke down, okay, the next thing that comes to my mind, I ask myself, is that where might potential buying pressure come in? Where might people look to look for buying opportunities in this market? And since I'm a price action trader, all I need to do is look back, and I would say that this is a potential area of support over here. Okay, so in other words, this area around the $21 price point, buying pressure could possibly step in. So anywhere from now to the $21 price point, right, this market could actually head down lower before serious buying pressure comes in to push the price higher. So when I saw this, right, okay, so here's my thought process. The daily time frame, as of now, I am bearish, right, because I'm looking at the now, trading the now. So when I went down to the 4-hour time frame, right, here's what I saw. So I saw this. The dollar Mexican, it was actually forming this consolidation over here, right? You just pull out the 20 MA, you notice that it has been contained below the 20 MA for quite a while, right? Tested once, almost twice, and now the third time over here. So my thought process is that, hey, the big picture, the daily time frame, the overall momentum is towards the downside. Until $21 price point, right, then hey, potential buying pressure could come in. At this point, I still want to be looking for selling opportunities. So what I did is I simply went with the sell stop order to go short on the break of this swing low. Then my stop loss is 1 ATR above this high, somewhere about here. Okay, and if the price goes in my favor, okay, I will just look to trail my stop loss as it moves in my favor. So in this case, yes, it did went in my favor. I'm just having a 3 ATR trailing stop loss, which is this purple line over here. So if the price breaks and close above it, I'll exit the trade. So this is kind of like how I trade and capture, quick burst of momentum. Okay, so this is a dollar Mexican trade. Again, the thought process is pretty much similar throughout the board. Identifying what is the higher time frame buyers, right, and finding trading opportunity, a setup on the lower time frame is if it's valid. Okay, so let me share with you another thing. Okay, so a couple of more things before we sum up today's video. Let's talk about the S&P 500. Again, same concept. So one thing about the S&P 500 is that look at the weekly time frame. Okay, let me ask you, is this a bearish chart? Is this time frame, is the S&P 500 on the weekly time frame, is it bearish? Well, from the looks of things, there is nothing bearish on this chart as well. If you ask me, right, I am bullish, right? You should be bullish, right, on the US stock markets. Market is still in an uptrend. Don't look for selling opportunities. Don't think that, given all the bad news that's going out in the world right now, a lot of bad news, right? The COVID, then we have some racism issues in the US. Again, the news, right? Yes, it's out there. But ultimately, what matters is the price, because the price is what pays. Remember, the price is what pays. If you buy at $15, you sell at $20, you will make a profit. The price is what pays. The news is not going to pay you. So pay attention to the price. And as of right now, the S&P 500, the US stock markets looks like in a pretty nice uptrend. Okay, not exactly a nice uptrend, but we can agree that, it's in an uptrend. How about NASDAQ? Again, almost retesting the highs. Bullish. Okay, so question is, how do you buy? If you trade stocks, right, then you want to look for buying opportunities for the US stocks out there, right? Possibly the ones which exhibits the signs of strongest relative strength. If you trade the ES, right, or the S&P 500, you can look for trading opportunities on the 4-hour time frame. So you saw earlier on the daily time frame, you can see that this is the pullback. It has ended, and right now we are on this what I call the trending move of the leg. So possible opportunities, right, on the 4-hour time frame. Again, your bias is towards the upside. So again, next thing you want to look for is your area of value. You already know the bias is towards the upside. Okay, so number one, bias is to the upside. Number two, area of value. So in this case, you can actually look at either moving average or support resistance. So what I've noticed is that the 200 MA seems to be a pretty respected MA. And also I'm seeing a potential previous resistance that could act as support, and it has the confluence of this 200 MA as well. So this around the 29.20 level, you could look for potential buying opportunities. Maybe something as simple as a bullish price rejection comes down, gets rejected, close strongly above support, can look for buying opportunities. Okay, so this is the S&P 500. And last but not least, right, one last thing just to share with you. This has been on my radar for weeks or maybe even months now. The bond markets, the US 5-year Treasury note. This is exciting stuff because if you look at this market, you just zoom out, right, you can see that this market overall is in an uptrend. And if you recall, earlier when I talked about the New Zealand yen, I said that volatility contraction, market moves from a period of low volatility to high volatility. When the price is forming a build up, you want to be looking for entries into it, because if you get the direction right, if you nail it right, your risk to reward on the trade can be pretty darn favorable. And that's what's happening now on the 5-year Treasury note futures. Couple of ways you can trade this. Number one, the very straightforward way is to just simply have a buy stop order. And by the way, this video here is only for educational purposes, right? I am not responsible for your profits or loss. Trade only with money you can afford to lose, right? So yeah, so that's a disclaimer, right? I will be looking to place a buy stop order above this highs, and my stop loss, right, will be 1 ATR below this lows over here. So somewhere about here my stop loss will be. Okay, so this is a very straightforward breakout trading setup. As you can see that the volatility of the markets here is getting smaller and smaller. So I'm expecting something big to happen. So yes, I'm trading with the trend. Yes, volatility is low right now, but it doesn't mean that it has to, move in my intended direction. I could be wrong. Market could break out and then reverse down and collapse lower. That's possible as well. The trading is all about probabilities. It's all about, odds. When you toss a coin, you do not know whether it's going to be head or tails. And same for trading. You never know, right? When you propose to the girl of your dreams, right? You never know whether she's going to say yes or no. I mean, unless you have been courting her for like a long time, right? If otherwise, that's a bad example. Okay, never mind. Ignore that, right? So basically, it's all about probabilities. So the first setup is very straightforward, right? Buying the break of this highs. Second one, right, a little bit more advanced technique is where you can look to time your entry on the lower time frame. So in this case, on the 8-hour time frame, right, I would say this level over here, around the 125 level here, around here where I just highlighted. Okay, you can look for buying opportunities right at this area of support. Again, look for something simple like the false break, right? Price comes down lower, get rejected, close up higher. Can look to go long, right? In anticipation that, hey, if the price breaks out higher, if it breaks above the highs of the build up, you can, catch the explosive move, right? And catch the next wave higher. Yep. So this is the 5-year Treasury note futures. Okay, and yeah, that's pretty much what I have for you for this week's market analysis. And if you enjoy, right, such market analysis, the thought process, the potential opportunities that is coming up, right, then I would like to invite you to to check out the Pro Traders Edge membership. I do such video every single week, and also we provide some bonus training for you to help you become a better price action trader. And again, right, there is a 30-day risk-free trial. All right, if you don't like it, right, we will gladly refund you back your money. And as what you can see over here, right, we're not here to take your money and hold it up forever. If you don't find value with it, right, we just gladly refund you. Like for example, this person here, Siva, right, say that infected with COVID virus, right, and wanted to get their financials in order, requested a refund, right, and again, our team will process it right as soon as possible, right, whenever we read your email, usually within 1 business day. Or how about what else? John, again, another one, right? He said study technical analysis, realized that technical analysis is not for John, then again want the refund. Hey, that's fine, right? We just gladly process your refund immediately. Okay, so really, right, we want you to get value. That only then can we take your money. If you don't find value in it, please take your money back. And that's what trading with Rayner is all about: providing value, trading quality materials to you. All right, so with that said, if you're interested in Pro Traders Edge, I'll just leave the link below. You can check it out. If not, I hope you find value in this video. I wish you good luck and good trading. I'll talk to you soon.